Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Analyst at GDMFX with the morning outlook for the company. Starting with the Japanese yen versus the US dollar. Right now the dollar is climbing to a 6-year high versus the yen, reaching levels unseen since the collapse of Lehman Brothers. Of course, that was after the Federal Reserve officials raised their target rate forecasts. Now, the greenback was set for the highest closing levels in 4 years versus the major peers after Fed policymakers increased their median estimates for the key rate to 1.375% at the end of 2015 versus, of course, June's forecast, which were 1.125%. Right now, the USD versus the Japanese yen is at 108.68 after climbing to 108.85. The Federal Open Market Committee retained a commitment to keep interest rates near zero for a considerable time after winding down a bond purchase program under the quantitative easing stimulus strategy. Policymakers tapered monthly bond buying program to a $15 billion in their 7th consecutive $10 billion cut, staying on course to the end of the program in October. Moving to UK, the currency over there, pound, strengthened versus the dollar as Scotland began voting on whether to end the 3-century-old union with the UK. Sterling appreciated versus most of its 16 major peers as opinion polls suggested the Scottish race is too close to call. Gauges of the futures price swings for the UK currency have suggested in recent weeks as investors grappled with implications of a potential yes vote, while options of the pound versus the euro were the most bearish yesterday since 2008. Awaiting, of course, in about half an hour, the retail sales numbers in UK in about 30 minutes from now. More interesting is in the commodity sector. Gold retreated to the lowest level since January after, of course, we mentioned the Federal Reserve increased its interest rate projections, spurring gains in the US dollar. Gold lost as much as 1.6% to 1216.60 an ounce in yesterday's trading session. And here is something more interesting. The U.S. Consumer Price Index fell 0.2% in August from the previous month, its first decline in more than a year, and has stayed below 1% every month since 2008. Of course, in the as we know, in the euro area, the European Central Bank this month announced its plan to buy securitized debt in a bid to ward off the risk of deflation. And since January, gold gained 2.8% this year throughout September 16, compared with, of course, 4.4% for the gauge of Euro world equities and 8.2% for the S&P 500 index. All right, let's take a look a little bit at the crude oil. Right now, West Texas Intermediate dropped for a second day as crude stockpiles increased for the first time in 5 weeks in the U.S. As we know, this is the world's biggest oil consumer. U.S. crude supplies have climbed to the highest level since 2012 for the first time of the year as production surged on a boom of shale output, and of course the output rose by 248,000 barrels a day to 8.83 billion during the week ended September 12. That was the most since March 1986. Of course, that's according to yesterday's report from the Energy Information Administration. Well, that's all for me. Thanks a lot for watching. Another thing, today is also a very exciting day on the market. Keep an eye on the economic calendar. Into the US session, news are coming out. Thanks a lot for watching. Bye-bye.